Good morning, traders. Manny Cabrera here from MDC Trading Academy with today's pre-market forecast for Wednesday, May 20th. Let's look at our news report for today. FOMC minutes today at 2 p.m. So look out for that. Anytime before that hour, market tends to slow down. So just keep that in mind. And it may, depending how the market opens today, it may have an effect till then. So watch out for the low volume, low volatility, simply because they're waiting for the report to come through. Although we've had pretty much an insight into what the chairman thinks by the interview he did on 60 Minutes, and also the fact that he testified in Washington yesterday. So he may not be, they may not be alluding to anything new here. So who knows? Maybe just this will be like a non-starter or non-effect. But nonetheless, you still have to consider it as part of your trading process. Let's quickly jump to our analysis here. As we look at our daily chart here, here's where we find ourselves right now. We have broken above the 80 SMA. That is a very key bellwether here in the market. Remember, these moving averages on a daily are very, very, very well known averages, and hedge fund managers and most analysts keep an eye on these things from a technical perspective. Remember, the 20 SMA, which is the yellow line here, has played a great role throughout several weeks, potentially even months. Eventually, the market found itself, as I've been saying for weeks, between this tight support and resistance area, this compression here. And you see all the activity is happening pretty much through here, between the purple, which is the 80, and the yellow, which is the 20 SMA. We've broken above the SMA. We've been holding. We broke below it. We couldn't hold it. Now we're breaking above the 20. We closed above the 80. Yesterday, we also, although we had a down day, we had closed above the 80. And today, we have an update that's happening above the 80. Does that mean we're clear? No. And I've been saying for weeks, the real resistance and test to this market is going to be here. The 200 SMA. That's the blue light special. That's the one that we're all keeping an eye on. Can the market retrace further? Absolutely. This is a key retracement confluence area, which I measured with some with a couple of pivots here through Fibonacci. So this is a good place for the market to return to find a healthy spot in order to continue if it rejects this. But remember now, as much of a difficult time as we have had going up because of all the SMAs, the 20, the 50, the 80. Remember, now those are behind us. So those are, now they become strong levels of support. So before the market gets down here to the 50, there's a lot of breaks that have to happen for that to happen. So technically, the market looks fairly strong to the upside. We have barely broken the 61% retracement. From this here to here, we have broken the 61% retracement. Typically, when we break the 61, we're normally thinking it's a change of direction in reference to downtrend to an uptrend, but we'll see. Keep your eyes open on these averages here, the 80 at this point, and also the 200. That's going to be the ones going to be playing a role for a little bit. Market has continued to provide us with some good volume. 1.5 is our average. Our ATR is at 85. We're looking for at least 1.1 or greater, or 14 our ATR, in order to consider a good tradable market. So we're getting some really good opportunities. Let's take another look at another time frame here, so we can get another scope a little closer here to our tick chart. As you can see, back into this resistance area again. This resistance area goes way back here to, let's see, where are we? Let me just pick a bar here. We're back here to April 30th. So this is back in April, late April. Market hit that top there. That was actually hitting the 20, the 80 SMA for the first time. And here is the market coming back, retesting it, fails. It is heading that way again with a deeper retracement than we had yesterday. So we'll see what happens. We have this trend line here. As long as the market remains above this trend line, we're expecting more continuation up, at least in the short term. So let's keep an eye on that. Let's look at our trade chart here, so we can share some of the things that we're looking at today. So again, here we are, we're above, we're between yesterday's intraday highs and lows. This is the high, this is the low. Market breaks clearly through the intraday low, could not hold there, popped real quickly in the pre-market, and has begun this nice little trend to the upside. Obviously trying to retest yesterday intraday high. So the place for today, this is our north-south line here. So when the market remains above this line here, we're expecting longs on retracements, by the pullbacks. Anything below here, potentially the market can move lower and attempt to oscillate down here to the intraday low. Now, let's just measure some retracements here. So if the market hits there, the market can retrace all the way down to here. Now remember, if the market breaks this line, we're thinking shorts. Shorts till about this level here. If the market breaks this level, then obviously it's a complete change of direction. If the market holds, then we're expecting the market to roar back into this direction. So those are the plays for today. Let me know if you have any questions. Have a great trading session, and we'll see you next time.